Hi everyone, I'm Martha Garcia and I'll be your moderator for today's session. Welcome and thank you for joining today's webinar, Must Hear 2018 Retail Banking Trends and Predictions. Before I begin, I'd like to go ahead and start with some housekeeping. The webinar is being recorded, so after the session ends, you will be able to return and re-watch this webinar at your convenience. We'll also be sending in, or actually if you can send in your questions at any time during the webinar, please use that Q&A panel that you have available to you. And you can feel free to send those at any time during the webinar. We'll be having a short Q&A session at the end. Now it's my pleasure to introduce to you today's speakers. We have Jim Marous and Antonio Sanchez. Jim is, of course, one of the most influential people in banking and a top 5 Fintech influencer to follow. He is an internationally recognized financial industry strategist, co-publisher of the Financial Brand, and the owner and publisher of the Digital Banking Report. Mr. Marous advises on innovation, portfolio growth, customer experience, marketing strategies, channel shift, payments, and digital transformation within the financial services industry. Antonio, he is focused on helping financial institutions deliver innovative digital experiences that delight their customers. Antonio is a technology veteran with experience in product marketing, product management, brand management, and sales. He has held various leadership roles focused on digital solutions, cybersecurity, information management, and disaster recovery. So at this time, I'd like to go ahead and hand over the presentation to Mr. Jim Marous. Jim, we're excited to have you. The floor is all yours.
Totally glad to be here, and I appreciate it. It's a pleasure to be with you, and it's great to be with the people on the line today. We're going to do a lot today. This is going to be the example of feeding all of this with a fire hose of information as quickly as we possibly can. It's exciting because as we look at this year's report, this is the 7th consecutive year that we have surveyed banks overall on the digital transformation and the trends and predictions for retail banking. This year we surveyed over 100 global financial services leaders for their thoughts on retail banking and credit union trends and predictions. In addition, we surveyed over 300 financial institutions worldwide to give us a ranking of the trends and predictions that our panel came up with. While there's not a lot of change in overall the trends from the previous year, there's a lot of change within each one of the trends as we look to 2018. So while the order and some of the trends are the same as in the past, what's interesting is the dynamics of those changes and the trends are certainly different. What is interesting is by collecting the insights from these influencers and ranking them, this provides this analysis, which is actually 106 pages this year, which is a record for the Digital Bank Report. It gives us the ability to really look at maybe what your organization should prioritize as we look to 2018. So without further ado, as we look at the trends and predictions this year, it probably comes as no surprise that when we look at them, the ability to remove friction from the customer journey and the ability to actually improve the customer experience is by far the biggest trend. Now, what's interesting is, while that is a trend and prediction, I'll get into a little bit later that it doesn't necessarily mean that we're doing all that well in that category, which may make it an item which is, from a strategy standpoint, very important. The second thing we saw was the use of data, AI, and advanced analytics to improve that customer journey. What's interesting about the dynamic of the second trend is that it is our belief that data and analytics is actually the foundation of every single trend this year. So you can go all the way to the bottom to looking at blockchain technology to all the way to the top on the customer journey, and every one of these requires an embracing of what can be done with data analytics. And so when we look at this, we have to remember that while this maybe is a second trend, it is probably the most important trend from the perspective of helping to reach the objectives in all the other categories. And in the third position was the ability to provide integrated multi-channel delivery. And this is becoming more and more important as more consumers are becoming digital natives. There wasn't too long ago when we looked at a digital consumer and said, you know, this is really what we're explaining as a millennial. But today, digital natives come from every demographic segment, both from an income and an age category. So we're finding that being able to allow a consumer to go from channel to channel and use the channel they prefer to do anything they want with their banking relationship is a very important trend that we have to look at. As we go down the list, and we're only going to cover about 5 of them today, the importance of open APIs and open banking and the changing of the bank ecosystem came up in the 4th position, with building partnerships between banking and fintech firms coming up in the 5th position. Very much along the same lines, if you look at the second last one, the 9th one is the emergence of new challenger banks, which kind of relates to the whole issue of being able to partner with fintechs. But I think what we have seen is that over the last 3 years, we're seeing a tremendous shift from competing with fintechs to partnering with fintechs. And there's another view of that as well. So as we look at that, and we look at the expansion of digital payments, the responding to regulatory changes, the exploring advanced technologies, and at the bottom, the testing and use of blockchain technology. One thing that shows up here that's a little bit strange is that innovation doesn't show up as a major trend or prediction. So that was kind of surprising to us this year compared to what we've seen in the past. Going to the next slide, what is interesting is what we would call a priority paradox. So while data analytics and the reduction of costs from a strategy standpoint are the top strategies for 2018, what we find is that updating systems and the customer experience are at different places. So put another way, because I didn't explain it very well, is that while we say we want the customer experience to be a key strategic priority, what we're seeing is more and more the reduction of costs is how we achieve that. Very much the way we look at mobile banking. Mobile banking initially was not seen as well, we can improve the customer experience, even though that's what we said to the press and to consumers. It was really to reduce costs. We knew that the more people we transferred from a physical to a digital channel, the better off we were financially. So when we look at this, we see that priorities don't sync up completely with the trends and predictions. So we have to look and say, okay, what are important to us? It is encouraging to see that the core business processes were higher than in the past, as was talent. And, you know, when we look at talent, which is right in the middle there, the acquiring and recruiting of talent, we'll talk about this in a little bit, but I think that this probably will be the biggest inhibitor of growth of financial institutions. My son is a 20-year-old in university right now, and he's taking data analytics course. And I asked him, you know, how many teachers teach us and how big of a course, you know, opportunity is it? And he goes, it really isn't. He says, I'm going to have to be going to summer school to get more of these data analytic courses. I said, why? He goes, basically, our professors say that the ability to take these courses is limited by the number of people that are in the teaching profession teaching these courses. So what is happening is most of the people that are the best in this category are currently in private industry. It is not going to get better. It's going to get more difficult. So when we look at the first trend of prediction, it was all around customer experience. And as I mentioned earlier, some of the challenges that the customer experience seems to have a sales and cost-driven focus. We did surveys earlier in the year on customer experience, and we found that the primary driver of an improved customer experience was ensured to improve the share of wallet and to gain efficiencies and to improve retention. Now, what's interesting is if you went to your consumer and said, your customers or your members and said, hey, our objective is to improve your experience by improving our share of your business and to make it so it costs us less, that probably doesn't resonate very well with the consumer. So we have to be concerned about this because we are also seeing that the measurement of customer experience, the ability to look and see how we're doing, is still based on metrics from the past. So what is happening, we're seeing that when we ask financial institutions, how do you measure if you're doing a good job on customer experience? The number one answer they gave us was being able to respond to challenges or problems quickly, and the second one was to have a great branch experience. Unfortunately, both of those objectives do not resonate with today's consumer. First of all, if you look in a room of 100 people and ask them how many of you had a significant financial issue that you had to call your financial institution, you'll see that the number in the room that will raise their hand is between 1% and 2%. So our primary way of measuring if we're doing well with customer experience in a financial institution is only impacting 1% to 2%. Secondly, when you look at the branch experience, there's been a 60% drop in the number of people that visited branches in the last 5 years. So our ability to impact the customer experience is going down if we're looking at it from the perspective of a branch experience. Now, that's not to say that financial institutions aren't increasing the investment in customer experience. So as we see here, and it came from our Improving Customer Experience in Banking Digital Bank report, 80% said they're investing more, 2% said they're investing less, and 9% said there was no change. Now what's interesting with that is we're putting more money to a problem that we found in our research is being measured and applied in many cases incorrectly. The majority of your customers today judge their experience by how well and how easy your mobile banking app is. If you fail with a digital consumer, you're failing with the majority of your consumers overall, because all of them, most of them I should say, are accessing your services via the mobile channel. So if you want to improve the customer experience, think about digital account opening. Think about improving the design and accessibility and ease of use of your mobile app. That is how you'll move your needle. As we look at data analytics, the second trend of prediction, we see that it is really taking center stage. As I mentioned, it is at the center of all the other trends and predictions this year. The ability to access, analyze, and deploy insights that benefit the consumer is no longer optional. Now, the challenge is that most financial institutions tend to drop the ball between collecting and processing and the deployment phase. My personal account's with Wells Fargo Bank. I've been with them for 14 years. They're very good financial institutions. They've made some errors, but who doesn't? But they've done well. The challenge, though, is I know they know everything about my relationship. The challenge is I don't know that they know about my relationship. They do very little to show me that they know me, that they'll look out for me, and that they'll reward me. I continue to get offers that are not well targeted. And when I had a challenge with my debit card, it was breached, I asked them, could you give me a list of those organizations where I have an auto pay or the same amount taken out every month so I can reach them and say, by the way, there's going to be a new account number. And they said, no, we really can't do that. Now, being a banker by trade, I know they could do that, but it's not built around their policy. So the challenge is sometimes you have the information. You just don't deploy it for the consumer's benefit. Now, what was interesting about that case study with Wells Fargo is that at the same time the customer service rep said, by the way, if you need to use your card right now, we've already applied it and connected it to your Apple Pay account. So that told me there's half of the bank that gets it and the legacy part of the bank that doesn't. So as we look at data analytics a little bit further, we see that the real power is in real-time contextual personalization. The ability to actually show the consumer that you know them and that you know them at any point in time As you see, digital banks overall, the ones that are digital only or mobile only, they will give you receipts as you make purchases and immediately show you the impact of what you're doing. The goal of using digital knowledge and personalization and the data for the benefit of the consumer, the best analogy I can say is the ability to, instead of looking in my rearview mirror and telling me what already has happened, to the ability to give me the GPS of my financial relationship and be able to tell me what may happen and how I can avoid it. The analogy I use is my son, about almost a year ago to the day, got in an automobile accident on the way back to university. He said, you know, at the time, I did not know I was really close to the truck in front of me, and the truck came over, I hit it, and luckily everybody was okay. What's interesting is he was driving a 2006 Toyota. The time he knew he got in an accident was when the contact was made, when he actually got into the accident. If he had a 2016 Toyota, that car would have told him ahead of time, by the way, you are about to get into an accident. He could have avoided that problem. That's what we have to do in the banking industry. We have to get beyond our legacy technology, our lack of unified vision, our lack of skills, and provide the consumer the knowledge that we know them, because that will be the differentiator in the future. Amazon, Google, Facebook, and Apple are training our customers to be more demanding. And the only way we can reach their objectives, the consumer's objectives, to know more about their daily life, is to take all the insights we have and show the consumer why it benefits them to be spending so many years with us. Getting back to my Wells Fargo example, as I said, I have no real significant qualms with Wells Fargo. However, instead of me feeling like I've had a 14-year relationship with my financial institution, it is almost as if I've had 14 one-year relationships without any growth in relationship. If this was a personal relationship, suffice it to say, I may have divorced the organization. So when we look at the third major trend and prediction, we look at the fact that the ability to have multi-channel connections, the ability of me to be able to connect with my financial institution in the channel that I prefer, in the way I prefer, at the time I prefer. One major statistic that was found by Novantas, which last year found that the consumer no longer defines convenience by branch location. Now that's startling. When you consider the fact that most of us legacy bankers lived on a branch-based environment and still, in many cases, have people within the organization that swear by the branches. Even though we talk about the fact that, geez, there are costs, there are an overhead, it's going to be hard to compete with an Amazon that doesn't have branches or digital banks in the future. Thank goodness we have trust and loyalty. The reality is our consumer rates convenience very high, but that doesn't mean it's branch location. Novantas found that the definition of convenience had more to do with the digital connection and the ability to transact easily and without friction on the digital channel than actually the location of the branch. This is not going to turn around. I'm not all of a sudden going to say, you know what, I'm tired of working with my phone to do my banking. I need to use the branch. In fact, we're trying to find more and more ways to not use the branch. Today's article in the Financial Brand, that a guest post that we had, talked about agency banking and how that's being done in less developed and in other countries overseas, where there are actually retail agents that can do virtually everything a branch transaction employee can do. The concern we have is we may tremendously improve our capabilities to serve in the branch, but does the customer even care? When you really peel back the layers, the consumer does not want to lose their branch, but when you get down to it, they don't want to go to a branch or a bank. They want to do banking. And the more that you can integrate that within their daily lives, but the better you'll be, because if you can relate it and bring it to the channel that they want, you're going to serve the consumer better and you're answering their needs. That does not mean the elimination of branches. What it means is a reconstruction of the way you deliver your services and the way you serve overall. Do I need a branch that's half a mile from my house? No, even though I love it. I go 3 miles for the times I have to go to the branch. So all in the past, the branch was the center of the universe. Today, the mobile device, and eventually possibly the wearable, is at the center, with branches and computers, email, social media, and even voice being the spokes around which the relationship is built. The key is to allow the consumer to transact in the way they want at the time they want, and sometimes, and most importantly, the ability to stop and restart wherever they want. So I may start the transaction on my computer and then decide to go somewhere. I want to be able to move my transaction from my computer to my phone, maybe to my watch, or maybe even in person without having to restart. A great example, and something I'll be preaching this in onboarding forever: consumers want to open their accounts digitally, okay? This was found also by Novantas. Overall and overwhelmingly, a consumer would prefer the convenience of opening their accounts digitally. That being said, the challenge is that while we may allow a consumer to start the process digitally, in 80% of the cases, and a lot more with the smaller organizations, we find that the consumer is forced to go to another channel to complete the process. Now, I not only worked in a branch in my career, but I not only worked for a bank, I worked in a branch. So let me give you a scenario, because a lot of bankers will say, you know what, our consumers are not demanding digital account opening. Well, if you're not opening accounts digitally, it's hard to know what they're demanding or what they prefer. And then a lot of organizations will come to me and go, not many consumers open it digitally, even though we give them an opportunity. Well, let me give you a scenario. Let's say I start opening my account on my computer, or more importantly, on my phone. Done well, it should only be about 5 or 6 steps. But let's say the financial institution that I'm opening the account with says, you've got to come into the branch for the know your customer or for actually making the deposit. When I go into the branch, I will guarantee you that in 90% of the cases, that branch employee will say the magic words, I'll tell you what, I know you started your process already. Let me ask you some of the questions that you filled in to make sure all the inputs are right, and we'll open your accounts in no time. Now, that sounds great to the consumer, to the new customer, to the new prospect. What's interesting is the reason why the employee is saying that is because they get commissions based on branch sales in 90% of the cases, not on digital sales. So what they are encouraged to do internally is to take that digital account opening process and make it a manual process in the branch. This makes it so that overall, we have the ability to show the consumer, to show our management that branches are still needed. My wife's in the retail business. She now works on the web side and the interactive side of the business, but there haven't been a day that goes by that the stores don't complain that the digital side of the business is taking their customers. I would say it's not that they're taking the customers are moving to the channel they prefer. As we look at the fourth trend that we're going to be looking at, we look at open banking. This is really interesting. Well, in most cases, people think that the open banking concept is really a European concept with PSD2. It really is a concept that's going to grab hold very quickly in the United States and everywhere else. In a nutshell, open banking opens up the data that you're holding to outside firms to allow them to provide a better experience and a better overall lifestyle on their behalf. Done well, it not only expands how a consumer can access their personal data to do different financial services, it can actually expand the way they integrate their financial services with other parts of their life, be it transportation, hospitality, e-commerce. Done well, what it does, it allows the financial institution to ultimately be the centerpiece of a consumer's life. We have more information on the consumer than any other partner that they have in the e-commerce or digital universe. It's a matter of whether or not we're going to be willing to apply that. We have a choice, unlike any time before, to either be the hub or the spoke of that relationship. Done well, if you partner, and I'm going to say partner with fintech firms, so I'm going to take the first leap, which is saying just financial services. If you can partner with fintech firms that do certain things better than you do, maybe they offer loans with a better digital experience, maybe they offer them a better rate, maybe they will actually take some of the risk of opening up lending to consumers that right now your organization doesn't feel comfortable doing it for. You may improve the experience, you may expand the product line, you may actually enhance the trust because you're doing things and providing value for the customer information that you've collected for years. Who owns the customer data? The banks don't. And we're going to get more and more into the realm where the consumers realize it is their data and they're going to demand value for that. If you don't provide the services that will make their life easier and that will integrate with other parts of their financial relationship, they can go elsewhere and get the same services. As we look at overall marketplace banking, and again, look at the hub and spoke and the ability to use open APIs, we can go beyond simply banking services. We can combine what we provide with what a challenger bank may provide, with what a fintech firm may provide, as well as including wealth management, insurance, retailing, transportation, hospitality. Every area of a customer's life is built on the way they make payments and the way they use their personal information to build relationships. If we're the custodian of that data and of that relationship, and we provide an ecosystem that goes beyond financial services in an efficient, seamless, and in a way that removes friction, the relationship gets stronger, the loyalty gets stronger, and the ability to work with the consumer gets stronger. So what are the benefits of open banking? When you look at it, first and foremost, it's going to provide an enhanced customer experience. So let's take some of the fintech organizations as a starting point. Fintechs came onto the scene because we were not able to, as an industry, as a legacy industry, to deliver digital products efficiently. Everything we did had friction, from a signature card to the inability to take data that's already on file and put it into a new account form as a person wants to open up something new. We made it difficult for a consumer to do banking with us. Fintech firms found that weakness and said, you know what, we may not have all the customer information, but we're going to take the friction out of the process. Now, they have an advantage. They don't have all the legacy back office that we do. But if we were to partner with a fintech firm and take their capabilities and put it over and above our legacy system, we can make the experience better. I bring up the example of TD Bank in Canada. They made a proposition and made a partnership with Movin in the United States. They did not take on Movin's bank accounts. What they did was they applied Movin's customer interface and made it so that the way the customer saw their account was completely different than they ever had before. It was simpler, It was more integrated, and it made sense to them. It felt digital. TD Bank made the decision, rather than trying to make this whole transformation on old legacy back office, they'd simply apply the customer experience on top of their legacy products. The effect, 1 year in a row, their financial application has been rated #1 in all of Canada because of the way the customers can interact. In addition, building these partnerships can reduce the time to market, can introduce brand new products and services, and can increase the efficiency. As we move more consumers to a better digital experience, we will reduce costs, but we won't do it in a fictional way. If we make partnerships work, we'll be able to do it in a way that the customer says, this was with me in mind. You don't have to go any further than if any of you use Venmo or PayPal or any of the other digital engagement services on the payment side. You'll find that it only takes a couple clicks to make a payment, to transfer funds, or to take in funds. What is interesting is the same transaction, even if you use Zelle, has more friction. The signing up for Zelle by itself is more complicated than either Square, PayPal, or Venmo. So the key is, how do I take all the good news that's out there and integrate it using bank APIs, open banking APIs, to make the entire process better? So do we even have a choice? As we look at what we have to do going forward, the consumers already identified the fact that GAFA, or Google, Apple, Facebook, and Amazon, already provide financial services. I doubt if any of them want to be a bank. But the reality is they are providing financial services through their engagements, through their services overall, and the way the customers interact with them, mainly in the payments area, but they also do it in funds transfer and in personal finance. Even those consumers that are not using a big tech as their financial institution or doing some of their financial work, they understand how these organizations interact with consumers. How easy is it to get on and off of Facebook? How easy is it to buy something and to return something on Amazon? I thought I was amazed when I got my Apple 10 earlier this year. The fact that the instruction manual was 4 panels of pictures. How many of you can give a consumer your mobile banking app and explain your mobile banking app in 4 panels of pictures, irrespective of how many different apps are integrated, how many things work together, and it takes a consumer only a couple minutes to say, here's how I get around this brand new device. And they self-discover new capabilities. So we really don't have a choice. The barbarians are at the gate, and the ability to compete is going to be based on how well we can meet these trends and predictions. The 5th trend and prediction I'm going to review right now has to do with exploring advanced technologies. Now, not every organization has the ability to look at all advanced technologies, and there's a prioritization that will take place based on your individual organizational goals and what you're trying to achieve. Compared to all the other priorities we discussed up to this point, nothing's less important than this with regard to the fact that I need to cross off a lot of those boxes ahead of this before I get into advanced technologies. However, we can't ignore them. The consumer's running at lightning speed, accepting and using technologies that weren't even in existence a couple of years ago. The example I'll bring is the whole issue around artificial intelligence and voice. I would imagine that everybody on the phone call today uses voice commands to either ask Siri or Alexa what they can do, an answer to a question. They also can find out that it is using intelligence to tell me things proactively that I haven't even asked. I found out that about a month ago, when I on Sunday was going out in the car, that it was about the time I would normally have breakfast with my wife and my son. And it told me how far I was from where I usually have breakfast, even though that wasn't where I was going that day. Later in the day, it also told me how far I was from the football stadium, because we usually go to see football games on Sundays in the fall. Now, it doesn't always work, but we realize that the devices we're using are getting smarter and smarter. More importantly, people are interacting with them in brand new ways. There's probably, again, not many people on the phone today that do not have a digital assistant device, an Alexa, an Amazon, a Siri, a Google Home, something else. But it's interesting, I just said the word Alexa, and mine and my desk is turned on. But what's interesting, see, she doesn't know that one. But what's interesting is this is going to be the major trend that we see in the advanced technology area that we all have to embrace very quickly. A consumer wants to transact in the easiest way possible. Voice provides them that capability. It provides them us the ability to not only ask for balances and to do basic transfers, but to do more involved communication, to purchase things, to transact with other consumers, other people, to transfer monies between organizations. There aren't many organizations right now in our research that have perfected or have done anything very deep in the area of voice, but this is being reviewed by almost every organization. It no longer is sufficient to be a fast follower. What we have found in the financial services industry, and this is quoted many times by J.P. Nichols, is that we are a follower, but not necessarily fast. So the key is going to be, how do we address the new technologies in the future? What's interesting is we look at why organizations are looking at new technologies. Not surprisingly, a lot of it has to do with growing revenue or improving the customer experience. It is important for us to embrace the fact that what we're looking at when we're looking at technologies like AI, wearables, voice, or robotics, we're trying to take the basic parts of banking and relegate them to technology and do a better job at the things that really matter, that work in front of the consumer. A friend of mine said a couple of days ago, Jason Hendricks said, you know, we have less need for cooks and more need for chefs. Could not have said it better myself. We need the ability to improve the digital experience using the highest level of advisory services and the ability to interact with the consumer, as opposed to simply processing transactions. We're going to see a shift in talent, a shift in focus, and a shift in deliverables with regard to this in the future. As I mentioned early in the presentation, the #1 barrier to improved analytics and innovation in the next 5 years will be a qualified workforce. Our demand for people that can work with technology, that can code, that can do analytics will never be greater. Many of us will outsource this capability to companies that can do the recruiting on an ongoing basis. The challenge is, are we even ready for these people? Have we gotten rid of the silos that create the friction and make it less able to combine data for the betterment of the consumer? Do we have inflexible and slow processes that make it so that overall, even if we had the right people, they'd be as slow as it was in the past? Are we truly digitizing only the front of the relationship, or are we also digitizing all the back office? It is not acceptable to simply take paper and turn it into a digital process. You need to relook at every part of the process. This was a major trend that we see coming this year. So sometimes we have to look at other industries for inspiration. In our 106-page document, what we found is a lot of, as I said, we had 100 people that provide us insight. And I have to quote Brian Solis here, he's an author, digital analyst and anthropologist for FutureWorks, good friend. Financial institutions need to introduce experiences that are more like Tinder and Instagram rather than traditional services they provide today. It's not just digital innovation and transformation where banks can compete for the future. It's also about reinventing dated policies, process, and products. What we really have to do is look at UX design strategies and principles and human-centered design that belongs in the C-suite more than ever before. Antonio, do you see this as a challenge? I mean, overall, when you look at the real inspiration and the ability to move forward, do you find that there's a lot of challenge with regard to digitalization and also looking at the ability to build better design?
Hi, Jim. Yeah, absolutely, definitely. I mean, it's interesting because as I read the report for the second year in a row, the user experience has been top of mind for everybody. The challenge that we continue to see time and time again is institutions that want to evolve to be much more digitally focused essentially are limited, and essentially those limitations are generally with their enterprise core systems, where they're basically trying to solve the problem by what is our systems capable of doing rather than looking at the opposite end in terms of what's the experience and what's the journey that we want for our customers, and then being able to refine that and, you know, test it and continuing to refine. So it's very much so what we're seeing. You know, it's interesting you mentioned about looking at other industries. We're actually seeing that a lot across a number of industries where companies, you know, are looking outside of, you know, in this case, don't just look at what other banks are doing, what the bank down the street or what the bank in the next region or what the global bank is doing. Look at the other industries like the airline industry or the automotive industry, and, you know, what we're seeing over and over again is people saying, you know what, that is something that we can incorporate into our business model that's going to be far and away unique and put us into much better light with our customers to better serve our customers.
You know, it's interesting you say that, because when you look at the airline industry, while you may not love all the time the way it feels, because it is somewhat of a bus on with wings, no one can fault the customer experience and the customer journey of Southwest Airlines. But if you go into an airline terminal right now, you not only see that you can print your own ticket, but you can print your own baggage tags and do your own baggage work. The person behind the counter is simply there to take those outstanding items for those consumers that really need a human interaction, and they process it with a smile. What's amazing, they are putting more of their effort towards being a great customer journey in the interaction part and taking all the data, all the stuff that used to be typed in with more keystrokes than you ever could imagine, and taking that out of the equation. That was not a good experience. Another thing is the whole Amazon Go experience in Seattle with their new grocery experience. When they were asked, boy, do people lose jobs? They said, actually, no. What we did is we took the people that were cashiers and put them on the floor to help consumers find what they were looking for, make it a better digital experience, and to do demonstrations as to how recipes and other things work. I suffice it to say that that is a much better experience than a traditional grocery experience. Ron Shevlin said it really well too, where vendors that create marketplaces that aggregate and integrate banking apps and tools for banking and credit unions will gain traction. Financial institutions will more easily integrate and employ the best-of-breed solutions, reducing the reliance on a single large core provider, differentiating their offering by offering a wider range of services, and find effective and efficient approaches to core transformation. I talked to Ron just earlier this morning. I think what's interesting is he'll be the first one to say, you cannot find one fintech partnership. In fact, he'll be one to say, you know, he quotes Jack Nicholson and says, you want a fintech partnership, you can't handle a fintech partnership. And I think there's something to be said for that. What you need to do is find a way that the right parts of the equation are provided by the right partners that you want. And there's a lot of marketplaces out there right now that allow you to pick and choose who you want to partner with and making sure they integrate with each other. That's important as we go forward, because we cannot stand still. We cannot be like every other financial institution. We cannot let our senior officers simply walk through the branch downstairs, walk up to their offices and think everything's the same. We can no longer accept the people around the table saying, you know what, we've never done that way. Or, geez, you know what, we tried that once and it failed. This is where you have to rethink the entire process. There are organizations out there that can provide a personal loan up to a certain amount with a click of a mobile button without having to apply. What in effect's happening in that case is the organization has decided to take the credit bureau screening that's happening on an ongoing basis from a risk perspective and apply it for the benefit of the consumer. Where on an ongoing basis, they'll say, Jim, if you need $2,000 to $3,000, we can provide it for you today. Push here, we'll fill out the application, you give us a digital signature, and you'll have your account, your money in your account in the next minute. That can be done. Now, the point is, will it be done, and is your organization structured to be able to do that? So we didn't cover everything that was on the 106 pages, obviously. We didn't cover over 120 quotes from financial industry influencers that we interviewed in the process. Shameless plug here. If you're interested in finding out more about the retail banking trends predictions that were sponsored by Kony and Diebold Nixdorf, I encourage you to download the report at digitalbankingreport.com. It's easy to get around the site. 32 tables, 106 pages and charts. And what's interesting is I think you'll be amazed by some of the things, but it becomes the guidepost for a lot of the planning going forward. We're not going to open it up for questions. I know there's a lot of people that are on the phone and a lot of people that are on the line and have asked questions. So we're going to open it up, and if you want to give us some questions, we'll see if we can answer them.
Yeah, thanks, Jim. Yeah, lots of great insights from this side today. So again, if you have some questions, we do have time for them. You can submit them through the Q&A panel. We got some good ones during the webinar. The first here is this do or die for the local 4 to 5 branch community banks and credit unions, or are they going to be able to straddle the line where traditional meets digital? Jim, you want to take that one first?
Yeah, I'll start with that. It's a great question. I've written lately that I think there's some small institutions that right now may be too small to succeed with some of the dynamics they have, and most important of which is culture. If organizations, no matter what size they are, don't embrace a digital and a new technology culture, they will not succeed because they will not move fast enough to keep up with or catch up to the demanding consumer. Now, I will tell you right off the bat that smaller organizations have to prioritize where they're going to do and what they're going to do. So first thing, make sure your digital engagement device, your mobile phone app, is up to date. Work with your partners, demand that it does what your consumers want. You need to have digital account opening. You need to measure customer satisfaction based on the digital engagement. You have to look at each one of these trends and predictions and go, yeah, I'd love to do all this, but let me pick 2 or 3 things. The challenges, and I gave Antonio this example yesterday, is we've done 6 years of study of new customer onboarding. For 5 of those years, about 50% of the financial institutions say that they have an onboarding process. Interestingly, for 5 years, about 23 to 27% of organizations say they're going to implement it this year. Now, there's something wrong with those metrics. When you get the exact same figures, that 50% have it and 27% say they're on the cusp of doing something for 5 years, you would think that 50% would go up some. The real challenge for anybody, be it a marketer, retail banking, product manager, a senior officer at an organization, is how do I get things done given all the day-to-day challenges? At the end of the day, you can get shut down if you don't meet compliance guidelines. On the other hand, you don't get shut down if you don't have a high customer service or experience ratings. So what I'd say is you have to do the basics right, but you've got to find time to move forward. Antonio, what have you seen?
Yeah, I mean, just to tag on to that, you mentioned the new account opening, the new account onboarding. I mean, for the smaller institutions, that's definitely one of those things where, you know, once they get the culture part of the equation in order and they have the alignment that they need internally, that's generally one that can be one that they can definitely go ahead and see one as being manageable for them. Because again, you know, when you think about customer acquisition and new customer acquisition, new account, holders that, nobody's ever going to be able to say, no, I don't want to go ahead and make it easier to acquire new customers. They may have to figure out how to fix some processes kind of on the back end once that's done, but at the very least, it is a first step, and it is a way to keep them moving forward and moving in the direction where they can be able to become, not necessarily fully digital centric, but at least on your way to get there, because I mean it's happening whether they like it or not. So it's just a matter of at what pace they need to do it, and that seems to be the thing that comes up the most often as far as sort of the toe in the water, so to speak.
It's interesting to say that. One thing we have to remember is it doesn't matter what size your organization is. You have to pick partners that are moving forward ahead of you. If you are picking partners that are simply doing the basics well, it's going to be a hard road to survival. I partner with Kony and Diebold next door for right now because they are a great example of organizations that are, especially Diebold, when you look at it, that are legacy organizations that are doing things differently. They realize that the marketplace and the consumer is changing, and they're trying to move forward faster than their partners are so that they can provide them added value. So when you're selecting your partners, big or small organization, make sure you're picking a partner that is moving forward aggressively on behalf of you for the consumer, because you're not going to have the time to do it yourself. That's why you pick partners. Next question.
Excellent. Yes, so there's another one that came in very interesting as well. So in the future, and not that distance, would you agree a branch is nothing more than a billboard?
I'll take the first half of that.
It's a very interesting way of putting it.
No, I don't. I believe branches will be in existence at least until I am off the face of the earth. It's just that there are not going to be nearly as many of them, and they're not going to be doing the same thing. The more and more I do banking, and my partner organization allows me to do banking using the channels I prefer, I have less need for a branch. I may travel. I mean, we found that in some studies we've done, consumers are now willing to travel 3 to 5 miles to a branch. I will guarantee you that most of your branches believe most of their customers come from within a mile radius. That's usually the metric that we use, mile, mile and a half. It's not a perfect circle based on geographic limitation, but the reality is we're providing more than the consumer wants. As a result, our cost structure is way out of whack compared to digital-only financial institutions. So I do not believe that branches will go away. I think what we're going to see is we're going to see more ATMs. We may see agent banking. We're going to see better digital apps and digital capabilities. We'll see fewer branches, but we'll see them doing more of the higher-end advisory services. I don't need a branch to make a deposit, to make a withdrawal, to do transfers. I less need a branch to make payments and to do other financial services transactions. There's machines and a phone that can do that for me, and the phone usually does it better. But, and a big but, organizations must structure themselves for that future. Branches today are kept open because of legacy thinking. In the city of Cleveland, where I'm based, there are dozens of branches that have 15 to 20 teller stations that are completely unused because of CRA, government regulations that make it so that closing that branch in the inner city brings with it some penalties in the future. The government's got to get on board. The financial institutions has to get on board, realizing that some of your most digital consumers are lower income and inner city people. We need to structure for that base. Let's take that money and apply it towards better digital interactions. Antonio?
Yeah, same thing. I don't think that branches are ever going to become billboards and, they're ever going to go away. I mean, in fact, if anything, what we're seeing is people are kind of reinventing the branch experience, everything from being able to, even though I haven't visited my branch internally in months, you know, I have walked by or driven by several of them, and we've seen, you know, some institutions that are testing advanced technologies such as augmented reality, such that, you know, when you're walking by your branch, you know, you could be able to get some, you know, specific information about, you know, yourself, perhaps some offer, but you know, even be able to get some additional assistance when it's needed. I mean, they're still using the branch, they're just using them for different services, generally advisory services. And if you're looking at kind of what some of the leading banks are doing as well, they're kind of creating the branch as almost like the coffee shop kind of environment, where they're, you know, making it very inviting. They're having their the people in there use tablets. You don't have these purpose-built kind of jobs anymore, but rather you have people that can be able to do a number of different, you know, types of jobs within the branch, and making it, you know, much more comfortable, almost like just visiting your living room and sitting on a couch and talking to somebody and getting some financial advice. So, you know, it's very interesting to see how that's going to go. I don't think they're ever going to go away, and I don't think they're going to go in my lifetime either, but great question.
Okay, one more.
We're right. Oh, okay, go ahead. Yep.
One more.
Okay, sorry. Yeah, one more, and then we'll wrap up here. So besides using data to customize marketing campaigns, how else can banks use their data to increase the customer experience?
Well, it's not just looking at the engagement side of it, but it's in product development. It is in finding out, you know, a lot of people still segment their customer base based on age, income, and demographic information, even account ownership, as opposed to how the customer interacts. It really is overall looking and saying, how can I use the insight to proactively address customer needs? Antonio?
Yeah, I mean, from what we're seeing, you know, the people want to use the data to be able to understand the journey and the types of journey their customers are having as they interact with them, whether it's mobile or online, and trying to understand trends, trying to understand if there's, you know, certain abandonment rates, trying to understand certain usage of certain things. And, you know, thereby refining and improving that experience so they can continue to have that pleasant. It goes back to kind of using the data to continuously refine, and then test the experience. But that's kind of how we see that trending.
So we're at the top of the hour right now, and I really appreciate being asked to join Kony and being able to interact with the hundreds of people that are on the line today. Anything else from our team?
I think that's it, Jim. Just want to thank you again for your insights. This was fantastic.
Yes, thanks
everyone.
Have a great day.